Welcome to the Zika presentation of examination techniques. I'm Velena Skangwa to present to you C3 examinations techniques. To begin with, the main objective of this presentation is to actually share with you the many competencies that are expected from the C3 candidates for this particular exam. Also to present to you the common mistakes that candidates that sit for this paper make. Also, we shall look at a debrief of an examination question for some of the past exams that have actually gone before. So first of all, the many competencies that you require to have for you to be ready for this particular paper's exam include your understanding of accounting concepts. So accounting concepts are a major part of this particular syllabus. It is one of those things that you do at the very beginning because you have to apply accounting concepts in all the other topics that you do afterwards. We will also look at your ability to prepare financial statements. So as a candidate for C3 exam, at the end of your coverage of the C3 syllabus, you are expected to be able to prepare financial statements. Financial statements include such as the statement of profit or loss, the statement of financial position, the statement of cash flows, the statement of changes in equity. These are the major financial statements that anyone who is pursuing this particular paper should be able to do at the end of the coverage of the syllabus. You also need to understand a number of accounting issues related to the commercial transactions so that when you go out there and be employed as a tax practitioner, you will be able to advise your organization on a number of tax issues that are also related to accounting. Very important for any C3 graduate, you are supposed to be able to understand financial ratios and their related limitations. So the limitations to financial statements are those factors that will hinder people from relying on financial ratios as well as relying on financial statements because of what is inherent in them. So it is something that will be expected of you at the end of the coverage of this particular syllabus. The other item is we have to talk about common mistakes that candidates that sit for this paper make as they prepare for their exam. So the first common mistake is that the candidates, some of the candidates, of course, they tend to cover only part of the syllabus instead of covering the entire syllabus. Remember that an exam is not going to be discriminatory. It is not going to choose which part of the syllabus to actually include the questions from, because questions in the exam will come from any area of the syllabus. So if you do the spotting of topics from the syllabus that you cover and you do some, sidelining of some topics, you just put yourself at a disadvantage. What happens to you in an event that you have even 2 questions or 3 questions in the exam that are going to come from an area that you sidelined, an area that you thought, okay, these topics don't make sense to me, I think I'll not bother about them, I'm not going to prepare myself with these particular topics. The other ones that I understand are okay. So you tend to disadvantage yourself because you could just have serious questions from the same topics that you could have actually sidelined. The other common mistake that candidates that sit for this paper make is actually not to do question practice using past exam question papers, okay, where you get a question and attempt to answer this question under exam conditions. This one is a serious mistake, because what is going to happen is that when you go to your exam room, instead of you going there to do something that you have already had an experience of, you go to an exam room and you'll be having the very first of your experience, what it means to answer all the questions, 5 questions in 3 hours continuous. And you may have a challenge, especially a challenge of time. Why? Because you've not had any practice of past exam questions under timed conditions. Remember that for each mark, there are 1.8 minutes that you need to spend on a mark. So what you do is, when you look at the total number of the marks that are in this particular exam that give you the 3 hours, it is supposed to be straightforward that for a 20-mark question, for example, you need to spend not more than 36 minutes. If you're attempting a question that has 10 marks, you need to spend not more than 18 minutes. If you're attempting a question that has, 5 marks, you don't need to spend more than 9 minutes. So if you lack question practice in your preparatory journey, what is going to happen to you is that in the exam, you are going to have a situation of attending to a question, a simple single question of 20 marks, even for 2 hours, if you're not very careful. And that way, you are unlikely to attempt all the questions in the exam. And this is going to actually draw you backwards in terms of achieving a pass in this particular exam. The other mistake that candidates that sit for this paper make is a failure to attempt a mock exam prior to the final exam. A mock exam is a very important tool because it will take you into the exam room prior to the actual exam. When you do the question practice, it's very rare that you get a full paper and attempt it in full for the entire 3 hours. But when you set time aside where you tell yourself that we are going to sit for this particular mock, when you sit for that mock, you will actually do all the required questions in the exam in 3 hours, and then you check how you fare. If, for example, you had a challenge with time, in the sense that, the 3 hours elapsed and you could not answer all the questions that are required to be answered, it is something that you give yourself as a homework. It's never too late. When you have attempted the mock exam, you go back to your drawing table, you sit down to say, where did I go wrong and where do I need to improve before the actual final exam? So you can get yourself out of this common mistake by making sure that you attempt a mock exam before the final exam. The other thing is, usually students, they fail to utilize the 15 minutes reading time in the exam. A lot of people are not too sure what to do with the 15 minutes reading time. So I'm here to remind you that the 15 minutes reading time can actually be used to your own advantage. How can it be so? In the 15 minutes reading time, can you make sure you read through all the question requirements? Don't read the additional notes to the questions in detail, but just read through all the question requirements. And ask yourself, especially from those that are non-compulsory, ask yourself to say, which ones am I able to answer with less struggle? And make sure that you list them first. If at all you have a question that you feel is going to be tough for you, it must be listed last, okay? So what it is the easier the questions that you start with, the more the questions you are likely to answer. But if you start with the most difficult questions, you are unlikely to attempt all the required questions in the exam. So make sure that you list the easiest according to you and your ability first, and end up with those that you consider more difficult to yourself. That is how effectively the reading time of 15 minutes can actually be used. The other problem that candidates for this paper have is they fail to understand the important verbs that are used in the question. As a result, they end up, answering a wrong question, answering a question which is not there. So when you understand the action verbs that are used in the question, your answer will be right on point. The common verbs for this particular paper include, define. So when you're asked to define accruals concept, what exactly are you being asked to do? Simply state the meaning of accruals concept. Stating the meaning doesn't necessarily mean going into a lot of details. Depending on the extent of the question, sometimes you're asked to define and give an example. Yes, define, give an example. So say accruals concept is a concept that says expenses incurred in the period are supposed to be matched with the incomes earned in the period. If the question just required a definition, that is enough. But it is also important, if a question has another aspect of asking you to give an example, you give an example using illustrative figures. So for instance, you say if the business incurred rent expense of 5,000 kwacha, but paid only 3,000 kwacha. You explain to say what should be charged as a rent expense should be the 5,000 kwacha, which is the amount incurred, regardless of what was paid. Then the portion of what was incurred but which was not paid needs to be taken to the statement of financial position as a current liability. So if the question is define and explain an example or define and give an example, please don't forget to give that particular example. The other common verb is explain. Just explain a particular term or phrase. How different is define from explain? So define is supposed to be shorter and to the point, whereas explain is supposed to go a little deeper. You provide the meaning of something by actually bringing out some of the terms in the definition and making them more clear. So you state the meaning of some of the terms that you have used in the definition. It means you are explaining, you are making more clear something. For a definition, it is not your responsibility to make very clear of the meaning, but put it the way it comes. Another action verb that students struggle with is describe. If a question says describe the characteristics of financial statements, for example, you are not being asked to define comparability, for instance, or just to explain comparability, but you are required to give a lot more of the features, characteristics of the comparability as a feature of financial statements. So in talking about comparability, if the question is to describe, qualitative characteristics. Okay, so the other mistake that candidates for this paper usually make is, failing to understand the action verb calculate. There are times when you get a question in this exam and it's asking you to calculate the charge to go to the profit and loss, or calculate how much will be taken to the statement of financial position. So please, what it means to calculate is try to compute some number, okay? Compute some number that is going to be recognized as either an expense or as an income in the profit or loss, or as an asset or liability in the statement of financial position. So for instance, if you have been given, a particular asset that was bought at a particular date and it has been sold at a later date, and the question is asking you to say, calculate how much will be taken to the profit and loss as profit or loss on disposal, for instance. So you are expected to generate a number. That's the action verb calculate. Another action verb that, confuse candidates for this paper. When a question says prepare financial statements, maybe it says prepare specifically statement of profit or loss or prepare a statement of financial position. There are times that some candidates will start putting paragraphs down when the question said prepare. So please, to prepare is to actually tabulate the statement of profit or loss or statement of financial position and take the appropriate elements there for the accounting period under review. That's what it means to prepare. So don't start narrating stories when the question is prepare financial statement. Another action verb that is common to this paper is interpret. Okay? So many are at times you are given already prepared financial statements and the question asks you to calculate some ratios. And the follow-up question to the calculation of ratios is actually interpret the performance of this particular company using your calculated ratios. So what you're supposed to do to interpret is to try and provide reason for the movement in the ratios. You may have calculated ratios for year 1 and year 2. So to interpret, whatever the movement of each and every ratio calculated from year 1 to 2, what are the possible reasons? Okay? So many are at times you may be given background information. That background information helps you provide the reason for that particular movement in a ratio. So for instance, if you are told this particular company stopped producing their own goods, they started buying from an external supplier, okay, in the current year. But last year they were doing own production. So that may have an implication for your gross profit margin. And indeed, if the calculated gross profit margin this year has deteriorated compared to that one for last year, the possible reason for that is clear. Probably, outsourcing production has led to, the cost of buying the goods being more expensive than when the firm was doing its own production. So that is how you need to relate. There are, however, ratios that you calculate and there's no background story. For instance, operating profit margin may have deteriorated this year compared to last year. When we say interpret, what we expect a candidate to do is to check the movement in operating expenses. So when you calculate the operating expenses to revenue ratio, if in the current year it has actually reduced, it means that performance has improved, meaning the costs were on the lower side compared to last year. Okay? So if the ratio, which is operating profit margin, deteriorated, the operating expenses may not be a reason for that deterioration. But if the ratio improved and the operating expenses to revenue ratio has actually reduced, you can safely say this reduction in operating expenses to revenue ratio could have actually contributed to the improvement in the ratio. So please, interpreting the performance of an entity is not just saying, receivable days have increased and hence poor performance, or payable days have reduced and hence poor performance, or gross profit margin has increased and hence good performance. That is not interpretation from this paper's perspective. In C3, to interpret is to provide an explanation for the possible reason in the movement of this particular ratio. Okay, so that is on the use of action verbs. The other thing is examinations techniques. So I've just talked about some of the mistakes that are common to candidates that sit for this paper. Let me now give you some of the techniques that will enhance your performance in the exam of C3. So the first one is that make sure that you read your questions clearly. Understand the question requirements and address it. So if a question is saying explain and give examples, don't define. If a question is asking you to compute, don't provide an explanation without numbers. If a question asks you to interpret, don't start saying this movement means good, this movement means bad performance. You are not addressing the question requirement. So read each and every question requirement clearly and address it correctly as per the guideline that I've just given you. Make sure you divide your time accordingly. Remember 1.8 minutes for every 1 mark. Do not answer a 20-mark question for more than 36 minutes. That is extremely important. Do not answer a 10-mark question for more than 18 minutes. Very, very important. As you work out your answer, especially for section B type questions, make sure that all your workings are clearly numbered. Working 1, working 2, working 3, working 4. And when you go to the financial statements, each particular working should be signposted in the many statement. So for instance, if cost of sales was actually worked out using a lot of other figures, and it was working number 1, when you do your profit and loss there, put in brackets working 1 so that the marker of your paper can make reference to that working. It's extremely disadvantageous for a candidate to simply add their variety numbers on the calculator and transfer the total to their many financial statement. When you do that, you disadvantage yourself with the individual marks allocated to the individual entries in that particular working. So for instance, you're trying to calculate cost of sales. There will be those elements like opening inventory, purchases, carriage inwards, returns outwards, closing inventory. If you do not do your working and transfer the total from there to the main statement, but you do it on the calculator, supposing one component you included in that working was wrong, be rest assured that your total figure will be wrong and you will not get the proportionate marks because the examiner has no access to your working. So please attach all your workings to your answer. Don't just do the calculations on the calculator because those, they will never be submitted together with your answer booklet. Very important if you have to succeed in this particular exam. The other thing is that most of the section B questions, the formats are standard. The statement of cash flows, statement of profit or loss, statement of financial position. Use the approach of laying down your format and then going to your question, picking the figures and slotting them in the order in which you feel, okay, for this figure, it's easier for me to get the final figure. This one is easier. Take them to your many financial statements so that if there are any figures that are hard for you to compute, those may remain unincorporated in the many financial statements. So learn to use the formats. They will help you earn the easier marks in this particular exam.
Whether you're laying down foundations for your business or restructuring market goals, it's important to have professionals that you can trust. Chartered accountants are key to business growth to help you bring your ventures to the world. That's why you should make sure you have a CA Zambia on board. CA Zambia is a globally recognized chartered accountancy qualification that ensures our chartered accountants uphold international standards and stay informed on the best accounting practices worldwide. Keep your business growth healthy. Go with a CA Zambia certified accountant. CA Zambia, developing business leaders.
When it comes to accounting concepts as a competence that you need to achieve, the common questions are theoretical in this part. Being theoretical, many candidates really, they don't perform well because they just, throw in whatever they can remember about a particular concept. My guide here is that if you can use the bullet points to put all your main points in place, you make sure that the second point is different from the first one. It's very helpful. There's a tendency amongst the candidates in this paper to write long paragraphs, but when you check in the long paragraphs, there are only 2 points that they have actually raised. When you use bullet points to answer theoretical questions, it's helpful to avoid unnecessary repetition of the words that are trying to explain the answer to this question. The other thing is, of course, it's important to do adequate question practice under exam conditions. Do as much practice as possible so that you can learn from the past exams, okay, how the answers were required to be displayed. That's why it's dangerous not to do your mock before this final exam, because you'll be coming across that particular question for the very first time. In talking about the preparation of these other financial statements, statement of cash flows, for example, you know that there are 3 standard headings in this statement of cash flows: the operating activities, the investing activities, the financing activities. So spend some time reminding yourself, what kind of transactions do I take to operating activities? What kind of transactions do I take to investing activities and to financing activities? Okay? So it becomes very easy actually to start from any area of a statement that you are comfortable with. So if I know that under investing activities, I'm taking the purchase as well as the sale of non-current assets, all I do is go to my question, look for those and slot them in. If I know under financing, I'm taking the proceeds from the sale of shares and proceeds from the issuance of loans, as well as loan repayments and dividends paid, all I do, go to the question, look for those items and slot them in. So a statement of cash flows as a question can actually be answered from anywhere. You don't necessarily need to start from the top, profit before tax, no. Okay? Start from anywhere. As long as you slot in the appropriate figures, you will get the marks for any entries that you make there. It is actually not easy to start from the top, because a lot of times the figures that you need to use to adjust your profit before tax may not actually be easy to identify from the question. But those other headings, the figures are just too easy. Just to check the statement of financial position last year, this year, what are the movements, and put your figures there. Brackets are critical in a statement of cash flows. Don't just throw in figures. If it's an outflow, put brackets. If it's an inflow, don't put the brackets. Or else you lose the mark for not putting the bracket where you should have put a bracket. So that's about preparation of financial statements. Other than you saying that financial statements are said to be comparable if they have been prepared using the same accounting policies, using the same bases, you are supposed to give examples of those bases. You say, for instance, if last year buildings were depreciated using straight line method, this year they also need to be depreciated using straight line method for the financial statements of last year and this year to be comparable. So you go a little deeper in trying to explain a particular, word or phrase. That is describing, giving many features of a particular item. So like item number 8 says cash and checks amounting to 69,000 had been paid into the bank account on 31st December, but were not yet credited by the bank until 2nd January 2018. So meaning as at 31st December, these checks are not yet credited by the bank to the bank statement. So what we do, if your reconciliation starts with a balance per amended cash book, you are actually supposed to say less uncredited to reverse them. And so that is how the requirement number A, which says state the updated cash book, that is how it is supposed to be done. So if you start your reconciliation with a balance per adjusted cash book, you add unpresented checks and less uncredited checks. So first of all, as a candidate for C3, you need to understand the meaning of recognition criteria. Okay, so what it means is that what conditions should be satisfied or be fulfilled for assets, liabilities, incomes, and expenses to be recognized in the financial statements. So what it is for assets, they can only be recognized in the financial statements if it is probable cash flow to the entity are going to come through. And for liabilities, they will be recognized if it is probable that there will be an outflow of cash or other resources out of the entity, embodying economic benefits, and the value or amount can be measured reliably. For incomes, they will only be recognized when there's an increase in future economic benefits arising from increase in the value of asset or decrease in the value of a liability. Also, the amount can be measured reliably. For expenses, they'll be recognized if there's a decrease in future economic benefits arising from an increase in liabilities as well as a decrease in assets. And the amount can also be measured reliably. So those are the recognition criteria for those elements of financial statements. If, according to your analysis of the question, the two companies are parent and subsidiary, it should be the easiest thing to do, because accounting for parent and subsidiary is by acquisition accounting method, adding line by line incomes and expenses or assets and liabilities. So what you do is, first of all, add all the assets and liabilities with an exception of those that don't get added. Then later you go to your additional information, look for those that you can actually adjust and make necessary adjustment. In no time you'll be done with your statement for the group of entities. Remember that an associate does not get consolidated line by line. So all that you shall bring on board is the parent's share of the associate's post-acquisition profits. And so when you leave out all the assets and liabilities of an associate, that is already a plus. Some people make a mistake and also add them. So understand the basic principles of accounting for a subsidiary and accounting for an associate. That is going to help you do the right thing. And then you remain with a few adjustments to account for in the remaining part of your working. Financial ratios. This is another area of competence that you must achieve. When it comes to examination questions, the common questions on financial ratios is you will be asked to calculate the financial ratios themselves. So on that part, the calculation part, what's critical is for you to know the formulas. Make sure you can categorize your financial ratios into profitability ratios, the liquidity ratios, the gearing ratios, and the investor ratios. You need to go to the exam having understood all the formulas. Again, it's one thing to know the formulas and another to extract the appropriate figures from the financial statements to substitute in the formula. Okay? So for instance, I know quite all right operating profit margin. The formula is operating profit divided by revenue. But the other question you must ask yourself is, when I go to the statement of profit or loss, do I know where to get operating profit figure? Do I know where to get revenue figure from? So spend some time making sure you are able to extract the appropriate figures to substitute in the formulas for financial ratios. Many candidates, they put down correct formulas, but they fail to substitute correctly. So that is a reminder I need to make on financial ratios calculation. On interpretation of these financial ratios, like I alluded to earlier, that you don't interpret by simply saying it has increased and hence better, it has reduced and hence poor. That's not interpretation. Provide necessary, appropriate reason for that movement, not just saying it has moved better, it has gone down and it's a poor performance. That's not enough. So do correct interpretation. The other aspect of the competence requirement is your ability to understand issues in a commercial transaction. So as a tax practitioner, you need to understand a lot of accounting related issues from a commercial point of view, because you may just be called and you need to give advice to say, okay, these are the transactions and we want to calculate our income tax on the profits. And so someone will ask you, what advice do you give us as to what we need to include as expenses and exclude as expenses? So can you make sure that you can apply your knowledge of accounting to a commercial scenario and be able to attend to those that require your expertise to make appropriate business decisions? So that is very, very important. Limitations of financial statements is one of those competencies that are required of a tax practitioner who has studied the C3. Know the limitations. Why would someone not rely on the profit or loss, on the ratios calculated? Be able to explain those limitations. Okay, so profit is very subjective. There are some of the expenses and incomes that are not actual figures, but mere estimates. And so sometimes, based on the accounting policies that the organization runs, these expenses could be overstated or understated, and hence, impact directly on the profit calculated. So you have to have that knowledge of those limitations and be able to explain them when you are required to do so. Looking at a debrief of a question in the exam. So this question is based on some bank reconciliation scenario where we have been given a cash book balance and a bank statement balance. So the cash book of Simwango shows a debit balance of 150,000 kwacha, whereas the bank statement obtained from the bank on the debt shows a credit balance of 295,000 kwacha. And we have been given transactions that brought about the difference in the balances. Remember, under normal circumstances, the cash book balance is supposed to be the same as the bank statement balance because all the transactions that go through the two documents are actually the same transactions. So, but however, this is common to the exam, that you'll be given different balances and the transactions that brought about the differences, and you need to deal with the differences. Meaning, think about, out of the list of items you are given, which ones are supposed to correct your cash book? Think about, out of the list of items, which ones are supposed to actually carry out a reconciliation, meaning bring the bank statement balance to line with the cash book balance. So first of all, as a general guideline, you can only use the transactions that the bank has recorded, which Simwango has not recorded, to update Simwango's cash book. So the principle in bank reconciliation transactions is that, there are times the bank has effected some transactions, but the business has not yet, because it hasn't yet received the bank statement. That is the scenario here. So we will go through those items, those 5-6 items, and see out of them which ones qualify to correct the cash book balance and the reason why it is a cash book balance adjustment. So given those two different balances, cash book 150, bank statement 295, they are actually both positive balances. The first item that is given as an outcome of an investigation why the two balances were different is that one says dividends of 24,000 kwacha had been paid directly into the bank account. So what it means is that Mwango has invested in some shares somewhere and they are being paid dividends which have gone directly to Mwango's bank account. And so Mwango hasn't yet recorded that. Remember, what is received at the bank is supposed to come to the debit side of the cash book. So this particular 24,000 is supposed to be debited to the current cash book so that you start the process of updating this particular cash book. Item number 2 says, a credit transfer, which was a ZRA VAT refund of 26,000 kwacha, had been collected by the bank. Collected by the bank. It means that this is a receipt into the bank statement. Any receipt into the bank statement should be put on the debit side of the cash book of Mwango. So this sits on the cash book to update the cash book. Item number 3 says bank charges of 3,000 do not appear in the cash book. So if you understand what bank charges are, the bank slaps some charges on your account for the services that they provide you with. Maybe of being able to use checks and be able to make payments anytime out of your account and so on and so forth. So what it is, that one is sitting on the debit of the bank statement. It can only come and sit on the credit of your cash book. So the 3,000 is supposed to be credited to the cash book for Mwango as a process of updating it. Item number 4 says a direct debit of 7,000 for club subscription had been paid by the bank. So if it has been paid by the bank, is it a cash inflow or outflow? So paid by the bank, it can only be paid on behalf of Mwango to the club that Mwango belongs. So it is on the debit of the bank statement, it needs to come to the credit of the cash book as a process of updating this cash book. So all the 4 items so far, they are items to update the cash book because the bank has done them, but Mwango has not yet done them. And Mwango can only do them in her or his cash book. Okay? Number 5, a standing order of 20,000 kwacha for Mwango's loan repayment had been paid by the bank. So again, the bank has paid, but Mwango has not recorded, and it's a payment. So payments go to the credit of the cash book of the business. So it's supposed to go to the credit as a process of updating the cash book. Number 6, Mwango's deposit account balance of 140 was transferred into his bank current account. So many times when we are talking about, the business's bank account, bank statement, we refer to current accounts because they are transactional accounts for the business. So this balance of 140 has been removed from the deposit account and put in the current account by the bank. So Mwango is not yet aware, and so it needs to come to its, personal record in the cash book on the debit. Then the next one, number 7 says, 2 checks drawn in favor of T. Chikondi 25,000 and F. Chanda 29,000 had been entered in the cash book but not yet presented for payment. So all the transactions that are recorded in the cash book, but they are not appearing on the bank statement, they are items for a bank reconciliation statement. Okay? And the principle in bank reconciliation is that what the business has recorded, which the bank has not yet recorded, is supposed to be reversed if you are starting your reconciliation with the balance per cash book. You reverse. So the unpresented checks, they are appearing on the credit of the cash book because they are a payment, but not yet debited to the bank by on the bank statement by the bank. So what we do is we bring that credit back into place. So that is why unpresented checks are added to a positive cash book balance to reverse that payment. The uncredited checks, they would have been debited to our cash book, but they are not yet appearing on the credit of the bank statement. So what we do if our reconciliation started with the balance per adjusted cash book, I wish to thank you for listening to this presentation. I hope it is going to help you in your very next exam. And all I can do is to wish you all the best in the exam to come.